everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 7th of May, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of May. And let's begin with the Euro, and it's still in a fairly tight range, sitting above the round figure of 105. It's not able to close below the 105, so it's still finding support there. And at the same time, although it did try to close above the 106, but quickly fell back into the range below the 106 again, and sitting in between these two round figures. And even after the FOMC rate decision, let's take a closer look on the Wednesday, where it climbed higher above the with the US dollar falling even after the rate increase of 50 basis points. This looked like a buy the rumor, sell the news type of move. But after that, on Thursday, it gave it all back again, back to the 105, and then settled on an indecision candle on Friday with a spinning top, almost a doji. So it's still in a fairly tight consolidation area, and I think we can maybe change some of these tips here, and let's move this one over here. Seems to be, yeah, seems to be settling between the 162 pip extension here, and below that is trying to get to the 200 pip extension at a 104.27 area, so around 104.30. Yeah, let's leave this pip here. Even if we move it down here, this could be another possible. This could be another possible swing move as well. Swing move down to intermediate low of last week, of the week before, to 107.57 area, and that gives the 162 fib at just below the 105, and then the 200 fib coincides with a swing low here on a bigger time frame. Let's take a look on the weekly time frame, or even a monthly. Yes, that's a major swing low from way back of early 2017. So we could use this bearish continuation move here, and let's move this major support level at the 103.30, and this intermediate resistance is sitting at 106. And a major resistance zone at this swing low, 107.57. It's also market intermediate support here. Okay, so let's also take a closer look on the 4-hour time frame, and expand it out, you can see there was the initial reaction where euro dipped lower after the Fed rate, the interest rate announcement from the FOMC, and then after that it flipped back out and broke through the resistance, broke through the 106. But then the next day, just gave it all back again and fell back to the 105. So it was a kind of a delayed reaction for the US dollar strength. And there could be further strength going to next week. The euro is not able to climb back up above 106. Let's take a look on the weekly time frame. Yes, it closed a very small range with a spinning top for last week, and it could be a pause with potential of further weakness. And this coming week, there's no major news from the Eurozone. Just a few US related news. CPI is one of them. All right. So I think we'll use this FIB for now. And let's also take a look at the US dollar index, the DXY, to see how that correlated with the euro and during the FOMC rate decision. And here's the US dollar index, where on Wednesday there was the drop for the US dollar index, for US dollar pairs in general, even after a 50 basis point rate hike. But it came back strong the following day on Thursday to climb back into the resistance zone, attempted to test the 104.00 round figure, and then closed as a spinning top on a Friday. Could be just a pause. But the support zone held. It's just between the FIB and the 102 level. This will be the major support. Okay, so let's also zoom in on the 4-hour time frame, and that's where it could not climb up higher, and it fell instead. So it was prepared to sell off first, and after hitting the support, and came back with vengeance on Thursday, back into the resistance zone and closed back higher for the end of the week. So this was really a delayed reaction. Let's switch to the weekly time frame to see. That was the tail with the bounce and attempting to climb up higher. And the next FIB extension is coming up at the 105. So 105 is going to be a key round figure. Let's see if we can update some of these FIBs here. I think we could potentially remove this one here, move this one up. And maybe even move it up higher to this recent swing. So the 200 pip extension is going to be at the 104.31. For now, it's restricted at the 104 round figure, along with this previous swing high from way back in 2 years ago. So it's struggling to break through above that high. And if we go to the monthly, yes, that's definitely a high in over the past 20 over past 15 years or so. Okay. And move this interim support to this 162 fib, and move this next support at 138 fib. This will be a major support at a 100 round figure with the daily 55 EMA coming up. Okay, so we'll see if the US dollar is able to break up higher, or if it's just going to consolidate next week as well, and how it impacts the other pairs. There's no major news other than the CPI for the US economy next week. A couple of other minor news, but no major one after the FOMC last week and the non-farm payroll. Non-farm payroll report was slightly better with more jobs added, but slightly worse in unemployment rate and the average wage earnings. So it was a bit of a mixed picture. And Friday close shows that as well. All right, let's move back to the other pairs. Let's move on to the cable, where after the brief attempt to climb up higher after the federal rate decision, Thursday was a bearish day with, apart from the pullback with the US dollar strength, there was the Bank of England's decision to increase rate as well by a 0.25% point from 0.75 to 1%, but the reaction was weakness in the sterling pairs, and you can see that here on the 4-hour time frame, falling all the way back down into the support zone at a 200 pip extension, and then on Friday just consolidating around that level. Move back to the daily time frame as well. And sitting above this swing low, look at the weekly time frame, just sitting above that swing low here from 2 years ago. and this is a weekly time frame, so that was a very weak candle as well. So there could be further weakness. We'll see how it goes for this coming week. Back to the daily time frame, and for now, I think we'll leave the fib as it is. And resistance still valid. With this major support now sitting at the swing low. And another possible intermediate resistance, but at this 124.00, it could attempt to retrace back up and climb up to retest the 125 round figure, but it needs to break through this 124, so could settle. Perhaps I should put this 125 resistance here now, and maybe even bring this one down. This area. So there's a lot of headwinds for the cable. I think I'll remove this first. And this could be a range for next week, a 200 pip range. But it is threatening to drop below with further bearish sentiment. And there's only minor news this coming week with the prelim GDP. So we'll see what the price action is going to be for next week. Let's move on to the Aussie dollar, where the RBA did increase rate even higher than expected. They were expected to increase from 0.1 to 0.25%, but they moved it even higher to 0.35%, and that was on Tuesday. So it did attempt to climb up higher on Tuesday, and then on Wednesday with the FOMC US dollar weakness, it pushed through the resistance zone at this fib area, but on Thursday it gave it all back, and as well as Friday. So it dropped all the way back down to basically near the open for the week. We take a look at the weekly time frame. That's the very long wick, almost a doji, but on the lower half of the candle here. So it's a massive consolidation range. It's trying to hold up above the round figure of 0.70. That's a major support zone. Along with couple of swing lows. So now this is an interim resistance zone. clear these, and this is the major one up here. Okay. So no major news from the Australian side, and this is a massive consolidation range then for next week, with the resistance, major resistance still at this area, and a major support below that at the 70 round figure. So perhaps between the 72 and the 70 round figure is 200 pip range for next week. Okay, so let's see how the US dollar moves with as it's hitting against resistance, and if it's not able to break, then there could be opportunity for the major pairs to recover somewhat. Otherwise, they are in danger of further weakness. All right. So do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.